In early 2025, our infrastructure team began forming a thesis around the supply and demand imbalance in the U.S. power sector. Driven by the continued growth of data centers, AI, and electrification, real power demand in the U.S. is increasing for the first time in decades. At the same time, we're seeing a decrease in supply due to aging generation assets, a physically constrained and inefficient power grid, and long interconnection queues. In order to execute our investment thesis, our team recently co-led an investment in a distributed renewable energy platform. This company's renewable assets enhance reliability and generate cost savings for commercial and industrial users who are increasingly turning to on-site generation as a solution to meet their growing needs for power. This investment ticks a lot of the checkboxes that we look for when underwriting infrastructure opportunities, including downside protection, long-term contracts, and success-based CapEx. Additionally, distributed generation assets tend to enjoy other benefits that we typically wouldn't see in a utility-scale asset. Think of your favorite grocery store as an example. Grocery stores are large users of electricity and have razor-thin profit margins. Anything they can do to reduce operational costs helps their bottom line. This company will install a solar system on the roof of the grocery store behind the meter, effectively jumping the grid interconnection queue, which, as of today, takes approximately 5 years to complete from start to finish. The system is built at no out-of-pocket cost to the grocery store in exchange for them signing a long-term power purchase agreement at prices that are, on average, 8 to 10% lower than what the customer is paying today. Since the company's projects are smaller and directly connected to customer sites, development and construction timelines are often less than 18 months. As a result, individual system components such as solar panels, control boxes, and inverters can be ordered a few months instead of a few years in advance. This means that both project costs and revenues can be fully locked in with contracts before construction even begins and material CapEx dollars are spent. This is just one of the several ways we execute on the theme of energy and power resiliency to generate value for infrastructure companies and investors. Our infrastructure team will continue Hamilton Lane's tried and true strategy of partnering with best-in-class sponsors to access unique opportunities that deliver attractive returns to our investors, while also addressing the challenges faced by critical grid infrastructure today.